Hi, everyone, and welcome back to the Anything But Bland podcast, where we talk about business, community, and everything in between. This is the Bland & Associates podcast. I'm Kayla Ruskowski. I have my co-host here with me,
Ashley Postaway. Hi, guys, and welcome back to another episode on the podcast, where today we're going to bring you one of the brightest minds in the accounting world. Today we have a true industry expert joining us for a fourth incredible appearance.
Wow, 4 times.
I know, I feel like I'm on a game show.
Yes,
so our guest is not only highly skilled CPA, but an expert at 1031 exchanges. If you're a loyal listener in the past, you already know how valuable her insight is. Please help us welcome back to the show, Danie Senske.
Thanks. Hello, everybody.
Yes. Welcome.
Happy to be back.
Good.
I love being here with the two of you. So this is great.
Love having
Well,
you.
yes, you asked and you shall receive. You said you had plenty of things to talk about,
do.
so
I
we're
do.
happy to have you back.
Yeah.
I appreciate the introduction, too. You always know how to make somebody feel really good.
Oh, good. I'm glad. I know I kind of feel like a show host, so I just kind of had to keep going with it, you know?
We got to get the guests pumped up and confident before we hit you with the hard questions.
I love it.
And then we need that little audience button in the background where it's like you have the people clapping, you know?
Oh, yes.
Like a Full
that would be
House back
great.
in the day.
Yeah.
Well, before we get started, we like to always ask you some sort of personal question.
Okay.
So I guess this is just an easy one. Like, do you have any big Memorial Day plans this year? Doing anything fun? Slip and slides, big slides at your house, water, anything?
Well, you know that's happening
I know.
4th of July. So for anybody that knows me knows that I have a huge affinity, I suppose, for fireworks and pyrotechnics. It makes my husband go crazy, and my mother-in-law, who is a former nurse, cringes every time I pull the fireworks out of the trunk because she's scared I'm going to lose a finger or two. So that is definitely in the cards this summer. I'm pretty pumped, and I have a tiny human at home that also is equally excited for that.
Well, my tiny human is excited to come to your house because he's like,
Can't
the
wait.
girl with the fireworks. I'm like, yes, Danie.
That's me. Don't worry, we practice safety for the little ones.
gosh.
Very safe. I always have the nurses on hand, mother-in-law, aka grandma.
For sure.
To say it.
gosh.
But yeah, so it'll be a good time.
Yes, I'm excited for that. The summer's going to be super fun. It's probably jam-packed for everybody, as we know. You know, you have summer's jam-packed and you're so busy, and then you have the fall, and it's usually pretty jam-packed. And then, winter hits, and it's kind of like a lull. And you're like, enjoy it because you've been so busy.
I was thinking about that this morning. I was looking at all the cool things that are going on in town in Omaha, and I was like, man, I wish there was more of this during the winter time.
Right,
But
when you were looking for stuff
I
to
guess
do.
that's the price we pay because, it's Nebraska and
Yeah.
it's cold.
Right.
And we're busy. That's why
Yes.
I don't mind that the weather's bad.
That's
and there's not a
true.
ton going on because some of us have to hunker down and
Right.
grind out
That's
some work.
True.
That's so true. Sometimes because I love to travel to Hawaii, and I sometimes secretly
So
look.
funny.
I'm like, ooh, could I be a CPA in Hawaii? And I'm
You
like, oh no, I would
absolutely
hate
could
that. I would
be.
hate that though because it would be so nice, and you would never get through a tax
But then,
season.
okay, so maybe your first year would be like that, but then
No,
you get
you
used
couldn't
to
do it.
Okay.
I don't think so. Yeah.
Hawaii's retirement goals.
Well, I just want you to go there so I can come visit, okay? So just make it happen. Whatever I need to do to help.
Well, I need to get really rich, so start there.
Well, maybe eventually, as we mentioned in our last episode, Danie's got a whole plan here to
Yes,
build up
sure.
her wealth, and real
With real estate,
yes,
yes.
is one of the ways to do that.
It is.
So continuing along in this informal series, I suppose, we haven't come up with a clever name yet.
We're going for you being on
our
our
Danie
podcast.
episodes,
Yes,
but
yep.
there will be something.
I love it.
We will get to that. So today we're going to be discussing another tax strategy that can be used for real estate investors. And I had to refresh my memory a little bit on this. I remember learning about it in college, and now whenever it comes up, I say, I would love to have you talk to our tax team about this because this is not my area of expertise. And as Danie has told me, and as I read a little bit, can very quickly become complicated. So as we always say, this is high level intro to the topic, and you can reach out for more information. So today we're talking about 1031 exchanges. And Danie, why don't you just start off with telling us what this
Yes.
is?
So 1031 exchanges are, I'm going to sound like such a nerd here. They are fun to me. They're
Yes.
exciting. They're like a puzzle. You want to solve this problem for your clients and help them with this really, really great tax strategy. And so you might call it 1031, but there's also like kind exchange. And so you might see it both ways. They're the same thing. 1031 exchange, like kind exchange. It's funny that you mentioned in college, because I do remember learning about this in college too, and even starting with 1031s as a new staff and thinking, oh my gosh, this is so confusing. But it really doesn't have to be. So primer for today's podcast is There are a lot of different kinds of 1031 exchange structures. I'm just going to start by saying that. They can range from just very simple forward exchange to your more complex ones of a reverse exchange, a built-to-suit exchange. So for the purposes of today's conversation, we're going to just kind of keep it pretty general, talk more about like a forward exchange, some of the how to have a successful exchange, and just a little bit of focus there, not get into the super complex stuff. Because as with anything in the tax code, you go down one road and it's very complicated. And you open another door and another door and another door of explaining various things.
Yes.
So it's what makes, I think, my job really fun, because I'm a huge nerd and I love to learn. But for purposes of 1031, we're going to keep it basic.
Okay. Yes.
So what is a 1031 exchange? And so essentially, the 1031 exchange allows a real estate investor, I should say, or somebody who holds real estate that is either held for investment, business use, or rented. It cannot be a personal asset, cannot 1031 a personal asset. It's very important to understand. You essentially are taking that property, you're selling it, and you're deferring your capital gains, your depreciation recapture into a new replacement property. And essentially what you accomplish there is you are now keeping the cash and restructuring your real estate portfolio and not having to pay a tax bill right now. And so it's a really cool strategy. And you might hear this where somebody will say 1031 exchange until you die. And so there's some benefits to that.
Oh my gosh.
I know, until you die, right? So we're so young, we're not thinking about that. But I'm serious though, because here's what you 1031, you defer, you keep exchanging. And eventually when you pass, your heirs inherit your property and they get what's called a step up in basis to fair market value. And now all of a sudden, all those deferred capital gains, they're gone. So that's not something you have to do, but it can be if you're really heavy in real estate, you can continue to roll your property and roll that equity over into a replacement property. So I have some notes here, so you might see me glance at my phone a little bit, but this is for my purposes to keep me on track, or otherwise I'm going to go down
those rabbit holes that we were just talking about.
Well, and let's pause for a minute and maybe explain a little bit further. So if someone were going to sell their commercial property and they did not do a 1031 exchange, they would have a gain that they would have to pay tax on.
Correct. Yeah. And so that's so going into an example, let's say you have just a single family home. So you have this rental home, and let's say this comes up actually often, and it did especially in the last few years. You have a house, you moved out, you converted your own house into a rental. And so now it's a business asset. You've had it as a rental for a few years. And you want to sell that and grow. Maybe you want to go buy a duplex or a fourplex. You want to grow up, step up, grow up. I shouldn't say that, but you want to grow up.
It's okay.
You want to step up and buy, grow your investment, your asset. You want to buy something bigger, I guess. Okay, you guys get the point.
Yeah, the next step up.
Yes, and so essentially what you're going to do, so you're going to go meet with your tax advisor. That's number one. If you're considering selling any asset that you own that's a business asset, or you're thinking about a 1031 exchange, you need to go talk to your tax advisor. Please do that. Don't call us after you've done it.
Yeah, it's too late.
So that happens. So anyways, you do that. Your tax advisor says, oh, man, Joe, you're going to owe a lot of money if you sell this asset. You're thinking, oh, shoot. Okay, what am I going to do? So you either take the cash from the sale, pay the taxes, and maybe you go reinvest after that, but now you have less cash to reinvest because you just gave 25% to the government. And that's just a round number. That's not exact. But so then you look at, okay, let's structure this as a 1031 exchange. And so what you do first is you need to call a qualified intermediary. Title companies typically have that built in. The title company will do that service for you, but really make sure that you do your research and find somebody that knows how to do 1031 exchanges, has experience with them, and they understand the process. And so that's a big step too, because this comes up quite often where taxpayers will say, well, I just took and I bought my replacement. And I'm like, but wait, did you use a qualified intermediary? Did you? No, I just went over there. Yeah. Well, then it doesn't count. It doesn't count. So we can get into that a little bit more.
Okay.
So you go and find this professional, the title company. They will then help you roll that cash essentially into your new property. So let's say it's your fourplex. You're going to buy this fourplex. So you're going to work with them, and you sell your replacements. That's your single family home. And so you've got, let's say it's a $200,000 house. You had $100,000 in debt. You have $100,000 in cash left over. You will never touch that cash as part of a 1031 exchange. If you ever get that cash at the end of closing, your exchange is over.
Done.
If it hits your bank account, you don't have an exchange anymore. So you work with this intermediary. They essentially take the cash, they hold it in escrow. And so there are various clocks that happen here now. And so you've sold your single family home, and now you have this countdown that starts essentially. And so from that date, you have 180 days. So that's 6 months. So 180 calendar days though, to then go and buy your replacement property and complete that exchange. You also, in that window, in the first 45 days, have to identify what you're going to buy. And so
what if you already know?
That's fine.
Okay.
That's perfectly fine.
Okay.
So you have to identify it. You have to have it in writing. And you can even identify multiple properties, and there's specific rules around that. So I'm not going to get into that today, but there are some options there that you can do. So you've done all that. You've identified your property. You work with your intermediary. They hold your cash, and you go and find your duplex. And so in a perfect world, maybe you already know the duplex you're going to acquire. And so that's a good strategy with people that enter into 1031s, is they usually have an idea of what their replacement property is going to be before they sell their relinquished property. So you'll hear me say that. Your relinquished property, that's your single family home. Your replacement, that's your duplex.
Okay.
Because otherwise what you can end up with is then maybe you can't find a replacement property. So you've now entered into escrow with a qualified intermediary. They have your cash from this sale. Well, and you can't get that cash until 6 months is over. But let's say you couldn't find a replacement. Now you don't have an exchange. You're going to pay taxes anyway. So that's the downside.
Yep.
So you complete this exchange. You find your replacement property. And, you've got this $100,000 that's going to go into it. And so another really important thing here, and so I've got some notes here I want to reference here. Really important thing to keep in mind is there's a lot of bad advice, I guess, out there.
Sure.
And I should say this too. Interrupt me if you have questions, please, because I'm going to go down
We
this
will.
road.
Yeah.
Okay,
Yes.
good. Okay. So, you've got this house, you've got this $100,000 cash, you're going to go buy this duplex, and there's some misconception where people are like, okay, well, I'm just going to put my $100,000 over there, I'm good to go. Well, no, not necessarily. Yes, that $100,000 of cash, that's your cash, your net equity, your $200,000 sales price, less your $100,000 debt, that's your $100,000 left over. Yes, that's going to go over, but you also need to factor in that debt that you gave up. So you'll hear things online, and there's good advice online, and there's poor advice. So just be mindful, talk to the professionals. I can't stress that enough. And really understanding, I'm going to do this exchange. What is my investment that essentially satisfies my exchange? And so that's taking your net sales price and calculating that. So it's you sold it for $200,000. So you've got this net sales price, and you have to calculate that by taking what you're selling your property for less eligible expenses. And so like commission, title. And so that's your net sales price. That amount has to be reinvested. And your cash too. So the difference between the two might be debt or new cash to the table. And so I get the question a lot where investors are like, well, I don't want to finance my replacement property. Well, that's fine, but you then come to the table with either more cash. You need to fund to have a complete exchange. And so a lot of times, as long as you're taking your asset and you're exchanging up, so you're buying an asset that's a lot higher in value, you're probably going to meet that just fine. But if you've got something where it's pretty close, you got to do the calculations. You got to work with somebody that can help you, because you want to avoid what's called boot. So it's kind of a fun word. I know your face is so cute. So boot, I remember hearing about that the first time in accounting. I'm like, boot, what is that? And so
What a name.
Another acronym.
I know. And where they came up with that? I'm sure there's a reasoning somewhere.
It doesn't stand for
They got
something.
lazy. I think they got lazy and they're just like,
Oh
let's
my
call it boot.
gosh.
Yeah. So boot is basically, and this is like really layman's terms, like a benefit the taxpayer gets, whether it's debt forgiveness or some kind of benefit you received or cash that you received, and it can trigger a tax implication.
So when you get the boot in this case, it's good.
No.
Oh, it's
because then
not
you would
good.
pay cash, or you would pay taxes.
Okay,
You would pay
okay.
taxes. And so like a boot in this situation might be you bought your single family home, and so you sold it, and maybe you bought something similar in size, but it wasn't quite an up in value, and then you got cash out of the transaction. Or maybe you sold your single family home, you had $100,000 in cash, and maybe you only reinvested $50,000 of that, and you got $50,000 in cash. Any cash that hits your bank account that isn't fully reinvested is considered boot. So then that's what you would pay potentially capital gain tax on that investment, and then depreciation, recapture, and all that fun stuff. I know, right? Like I said, it gets complicated really fast.
Yes.
Okay, so the great thing about the 1031 though is just you're repositioning your real estate portfolio without taking the tax hit. You're keeping more cash, basically being able to reinvest more than had you not done the exchange, because then you're giving some to the government. Now, and if your strategy is to continue in real estate and continue to build those assets, like I said, 1031 till you die. It's a great tool. And with how the tax code is written now, it works for a lot of investors.
I'm going to pause you real quick.
Yeah.
So I kind of hear, as you know, I'm in the marketing world, not the accounting world, but I'm in your world, but trying to ask you different questions. But so like you see a lot of people right now, some investors, maybe not real estate investors, just normal families are purchasing real estate, such as like a house for their kids, in the future. So is this kind of along that same line that you can buy? So you're selling this house and you're going to buy a duplex. And like, is this like a savings account for your? Could it be a savings account some sort for your children growing up?
So the asset itself, sure, yeah. I mean, that is how you can look at it. Just like a savings, I suppose. It's not as liquid because it's tied up in the asset. But the only way that 1031s work and as a strategy for you, it's you want to sell a property, buy something else, but they both have to be business properties. So if you had a personal home that you wanted to 1031 and buy it like a rental, you couldn't do that.
But you couldn't have a house be a business because
even if you can, if you rented it.
Okay, yes, I mean, okay.
Yes. So let's say like your former house before you moved, if you turned it into a rental and you had tenants there, they paid you fair market value rent, and then eventually you wanted to sell it and buy something bigger, a duplex, that would work.
Okay. So what if you buy something bigger, as in like a bigger house?
Yeah, as long as it's, bigger house.
Just more money, just
value of the house. And
okay.
you might even have a partial 1031 exchange. That's another thing. Maybe you want to get out of this one property, this one business property you have, and buy something different. Or maybe you can't find something you want. The replacement properties aren't quite right and you don't want to settle. And so you want to defer some of your gain. You can do that too. Okay. So you would exchange into something that may not be a higher in value, maybe it's slightly less, and you're still getting some cash or boot, the fun word boot at the end. You're still going to have a tax implication, but you are maybe still deferring some of your gain. Okay, great question.
Yep. Okay, so Danie, one more. I guess I have a question to add to that. Are there any misconceptions surrounding a 1031 exchange?
Yeah, definitely. Like I had said previously, there is certainly some good advice out there, but also some poor advice. And so one of the biggest misconceptions, and I know I'm going to talk about this again, but is the cash at the end of the deal. So you've got these cash proceeds that are going to go into the new property. Yes, that goes into the new property, but you also need to understand that if you had debt or other items at closing, you have to be able to satisfy that. So really understanding what is your net sales price. Your gross sales price less your eligible expenses like commission and title fees is going to be your net sales price. The difference of that number to the cash proceeds that you receive, you have to satisfy that total there. Okay. So that's one of the biggest misconceptions. Another one is my property has to be exactly the same. So I have to 1031, I have a single family home, and I have to buy a single family home. Right. No, that's not true. It has to be like. So in real estate world, so let's say you want to 1031 a single family home for a piece of land. You can do that.
Okay.
You want to 1031 a home for a apartment complex. Sure.
What about a boat? Oh, no, it's
no.
not.
No. Well, okay, so there are that's a very complicated topic. If we were in California, I might know a little bit better. You can rent, you can have a boat, be a business, but that is not, we're not going down that road.
All right, sorry, keep going.
But good question. And where's the boat? Take me for a ride.
My family has a houseboat down in Arkansas somewhere, so I was thinking house, it is different.
So if it was like a business asset that they rented, and there's a lot of really specific rules around that. I'm
sure.
Yeah, we don't live on a coast or by a big body of water, so sorry, listeners, I don't spend a lot of time.
But if you do have that, Danie can figure it out for you. I promise.
Probably could. Yes. Anyways, so that's one of the biggest ones. Is like people get confused on what do I have to purchase? It has to be alike. It has to be exactly the same. Well, no, not necessarily. And so oftentimes I see investors have maybe a commercial building and they want to get out and they want to go buy a big multifamily apartment complex. You can do that. Okay. So in the real estate world, that is considered a like kind of exchange, and it's satisfied. And so I kind of quickly, as I'm talking, I'm thinking of new things too. So certainly interrupt. But I was thinking about earlier when we were talking about, I was talking about kind of the exchange, and I know I went over that really fast, and I'm sure I glossed over a lot of listeners, unfortunately. But the timeline is very important too, and understanding. So I suppose in misconception, they might hear 6 months. Well, I have 6 months. Well, no, it's 180 calendar days. And so that really matters. And that clock starts ticking As soon as you sell that replacement property, that clock is in play. You have 180 days, and then also the qualified intermediary. I mean, you have to work with that person from the get-go, or you don't have a full exchange.
Are they the one that will maintain your documentation in terms of the 45-day benchmark as well? They can help kind of
typically the title
check that
company will do
box
all
for
of that
you?
for you.
Okay.
You know, on a simple forward exchange, it's pretty basic. There's reasonable fees for the title companies to do that. Might be like $750 to $1,000 or so. So it's not crazy for a title company to do that, and they'll handle all the documentation on your end. Now, if you venture down the road of doing a reverse exchange or a complex where just a quick on a reverse exchange, that would be where you buy your replacement property. You know you want that fourplex. You go buy that first, and then you sell your replacement property. Same rules apply. You're in the 180-day window. There's a little bit more involved there, but usually a good title company and getting an attorney involved to handle the document and the paper trail, then that's what you would do there. Certainly more costly and complex should you do that.
Right.
But it happens, and some investors do it that way. They know that they want that replacement property, especially in a crazy market, or maybe they have a good relationship with that seller. They may structure that way.
Gotcha.
Yeah.
Talk about ownership implications.
Oh, yes. Okay. So this actually came up recently. I had a question on this. And so typically with a 1031 exchange, the ownership must remain the same start to finish. So if I own it here, I have to then buy it here. I can't change my ownership. So what does that mean? So let's say, here's an example, still with the single family home, fourplex, duplex. So I own this single family home as an individual, and I sell it, and I want to go buy this duplex, but the lender wants my duplex in an LLC. So now I've owned it in Danie Senske LLC over here. Do I have a 1031 exchange issue? Well, as long as my LLC is still what's called a disregarded entity, at the end of the day, the taxpayer is still the same. It's just me.
Yep.
So I'm either me here or I'm me here through a disregarded entity LLC, and then it's okay, and you're allowed to do that. And so that comes up often because real estate investors will put their houses in a different LLC. And so at the end of the day, you can still have an LLC, but if it's not a disregarded entity, it's not the same thing. So disregarded entity means that taxpayer essentially is the same.
You can't add a partner or something on that.
Yep. So then it would be, so you could still bring in investors, but you have to structure it a little bit differently at the end of that replacement property and how you.
And if they're working with you, they would know all this, or
yeah, we would certainly consult on that, because there's, like I said, there's very complicated exchange options, especially getting new investors in and new equity. And yes, it's working with a professional taxpayer that understands them, and attorneys that understand them, and title companies, and then you'll set yourself up for success every time.
Yeah, because I don't think they're going to know all these deadlines and
sure.
days
Absolutely
and who
not.
should be on the account and who shouldn't be.
Most of your real estate investors that are heavy in real estate, they understand the clock, but definitely anyone new getting into it. And people are diversifying. I talked about this last time. There's lots more people that are using real estate as a wealth building tool. And so they may not have heard about it, and honestly, the biggest thing that I always see is it's too late and I can't do anything to help them, is they've already sold it, bought something, thought they did a 1031, and they didn't, because they didn't follow the right steps. And so I know I keep saying that over, but it's really get involved with the experts to start, because then you'll be set up for success.
So is there a 1031 exchange season, or is it just anytime you're buying or selling?
Yeah, anytime you're buying or selling.
No deadlines on when you need to, besides like the 6 months or whatever.
Yeah, I mean, and you've got your standard tax deadlines, obviously, but yeah, I mean, if you're thinking, even if it starts to cross your mind, hey, I think I'm going to sell and I think I want to call your accountant.
So this could be part of like tax planning that you guys do for people.
Absolutely.
So a realtor is saying that this is what I see this year is going on. In 6 months, I am going to want to buy something. So you kind of encourage them on the right path.
And maybe and that's a good point. She said tax planning. So that's also why to have a good relationship and talking to your accountants, because they're going to know your tax situation pretty well for you, is maybe a 1031 doesn't work for you. Maybe you have a property.
What's the situation where it doesn't work?
Okay. Yep. That's what I was going to. So maybe you have something where it doesn't work, and so you've got a passive investment, and so you haven't been able to take these losses because you're passive, your income's too high. They're all trapped up in that property. Maybe you want to sell it, because then you can open up all those losses for you. Or, maybe another scenario where you have a lot of capital loss carryover, or you have another real estate that you sold at a huge loss. You took a huge hit. There's definitely some strategy where it maybe doesn't make sense to 1031. Because, pick up the capital gains, but you have some other scenarios on your tax situation that'll essentially wipe that out for you. So always consult with the professionals who can help run those strategies for you. It's going to be worth your time and money every time.
Absolutely.
I feel like tax planning is just so important. I don't think people
is.
really
Yeah.
understand the importance of, like, even if you have a small business, tax planning is very important. It can help you
I think so,
save
yeah.
money and spend your money correctly so that you can not owe as much.
Here's what I always say is everybody needs tax compliance. We all know we have to file our returns. You're not getting out of that unless you're a criminal, but you're gonna file your taxes.
Right.
And so it's not, why not set yourself up for success and have some, I mean, even at a minimum of cash flow planning, of knowing I'm going to have to pay X dollar.
Yeah.
We're kind of getting another topic here, but
Sorry, yeah.
no, it's
That's
good.
true.
It's a good conversation. Just cash flow planning is I know I'm going to have to pay X amount and I can plan my cash flow for the next 6 months. And the same would go for anything real estate related. And if you're thinking about doing deals such as a 1031, or maybe there's just an opportunity, maybe you didn't know reverse 1031 existed. And
Right.
having the conversations with somebody who understands all the ins and outs of 1031s, you can be well informed and know the information ahead of time before,
Making a final decision.
Yeah, absolutely.
Awesome.
Yeah.
I mean, this
I was
is
like-
also helpful. Feel like I've said it before too. Feel very thankful that she's on our team and
Well,
we
yes.
have her as
and being able to
a
explain it in
resource.
layman's terms for
Exactly.
myself and others included.
I hope so, because I have a problem with this. It's can be really complicated, and in my brain it makes total sense. And
Well,
so it's how do I
I'm
communicate that
Right.
to somebody who isn't in it every day, who isn't doing 15 of these a year or 20 of these a year, And so you are asking really great questions, and I always encourage, if you aren't sure and you have the question, ask the experts. There are some good resources on Google. There are, but be careful and tread lightly with some of those, because it's just not going to fit your situation every time. And
Absolutely.
Yeah.
That's what we were talking about offline before we started, is there's probably so many different combinations of how this could look and what circumstances might impact it. And there's just not a general one size fits all
not always.
approach.
No,
It's important
there's
to
not.
understand, but
Yeah.
also
Yes, even just the very basics. Working with the professionals that understand it, qualified intermediary, never touch the cash, because then you're going to have to pay taxes, and the timeline, understanding those, and that's pretty good to help you. But then once you get into more complex things, certainly give us a call at Bland. Even from a consulting standpoint,
Right.
we can help.
Yes. And
Absolutely.
like I always say, I have my email in the bottom of the show notes. So if
Yeah.
you have questions for Danie, feel free to email me and I'll connect them with Danie and connect her with you. So
yeah.
I nerd out on 1031s, and I live for them. I love them. They make me excited. So
She
She
on
truly is
everything.
in the right place, man.
I do. I get so excited because they're like a puzzle I can solve. And the more complicated, I think, the better.
because when you solve it, you just feel so
You
accomplished
feel
with it.
so
Yes.
good. And
Yeah.
anyone that's listening, if you're in the accounting world, when you get that reconciliation and your net is, you have no variance, oh man, you are dancing. You know the feeling. Don't
I
say you don't.
do. And then your clients are so appreciative too, and that makes your heart swell.
Yes, it does.
You're feeling it's just good all around.
Yep.
So I have to say, this is like along the lines of I'm just a nerd. So when I was reading this morning, apparently now 1031 can also be a verb, which I was listening. You did use it as a verb, like let's 1031 or 1031
like an
until you
action
die.
item.
Yeah, and that's because everyone's
Love
just like
that.
so pumped
Oh
up
my
and
gosh.
wants to do this. So
I guess I didn't get that publication in my email this
1031.
morning.
Yeah. Maybe that's the name of this app.
Oh my gosh,
Let's
it's perfect. Let's
1031.
turn 31. Yes.
Okay.
I'm going to make a note of that. That's perfect.
All right. Well, Danie, thank you so
Yes,
much.
yes.
This is definitely not the last time we will have her on, folks.
Right,
So get
for sure.
used to her voice.
Can't wait to be back. It's fun. It's a good time. You guys are great hosts.
Yep,
Oh,
we kept it
thanks.
pretty high level. You
Yep.
didn't go to the weeds too much. So I think everybody's
tried.
going to be perfect with that. And if they want to hear back more, email us and we'll
Yep,
bring
absolutely.
you 10. Let's talk 1031 2, part 2.
Yeah, definitely. Yes, give me a call. I'd be happy to help with any 1031s.
Yeah. So as I always say, we like your comments, reviews, shares, suggestions that you send to us. We're trying to build our season 2. So, keep those coming. Look for our posts on social media and share them for a chance to be entered into a drawing for some sweet swag or gift cards or anything. We're open to suggestions if you have something really cool you want. We have some cool tumblers. We have cutting boards, golf balls, all kinds of things. So,
Yes.
So please, leave those reviews and share it and send us any feedback that you have.
All right. So thank you all for tuning in today. We, as Ashley mentioned, are just very appreciative of our loyal listeners and all the new people who are joining us on this journey. And our aim of this podcast is always just to provide you with additional information, something you didn't know yesterday that now you know today. And maybe the 1031, you're not a real estate investor, but your friends, your family, you know, it's something to be aware of. And I think we're all just, this is so nerdy too, but like students of life. I mean, I think a lot of people enjoy just learning something new every day.
You don't know what you don't know until you know, and then maybe you want to do it.
Exactly. And so that's truly what the mission of this podcast is. So thank you everyone for tuning in.
Yeah. So friends, be informed,
be inspired,
and be awesome. Bye.
A Hurrdat Media Production.